guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how to go from zero to quitting your full-time job in 1 year to become a swing trader. We're going to be talking about what I did, the strategies and stocks that we're holding, and how you guys can start doing it too. So I hope you guys all enjoy it. If you guys do, hit that like button and subscribe. And if you guys want to learn more about swing trading and trading in the market and how I find these stocks that we're going to be talking about, check out our school. It's fantastic. We have private live streams, we have quizzes, we have lectures, we have a group chat, but more importantly, we actually teach you to trade. It's not a get rich quick scheme. It's not alerts or anything like that. It's honest strategies that I've learned over the past 7 years of swing trading. So if you want to elevate your swing trading and literally take your trading to the next level, check out our school, and you guys can get 20% off by using code YouTube. Use code YouTube. It's worth it. And guys, let's jump into this. All right. So everybody wants to become a full-time trader in a year. And I will tell you guys this one thing that really helped me with my trading. You are the result of your actions. Meaning, if you think it's easy, if you think it's an easy way to get rich quick, if you think you can turn $100 into $1 billion, I'm sorry, you're not going to do that. Trading is a very, very difficult thing to do to do, right? You've heard those statistics of 85% fail. Now, what I always say when I hear that is I always think of business, right? I went to school for business. I have a business degree. Now, those same statistics go with business, right? 85% of businesses fail. So what are the 15% that succeed? Right? Those businesses have a business plan. They know their competition. They know their market. They know everything about, or as much as they can, about their product that they're selling. So with trading, what do you need? How can you be in that 15%? You need to have a trading plan. You need to know as much as you can about stocks, as trading, different indicators. You need to master your platform. You need to know as much as you can, consume knowledge. But more importantly, you need to learn from your mistakes, because every trader loses money. You need to learn from it and not look at it as like a terrible thing. When I take a loss, if you guys watch a lot of my videos, yeah, I'll take a loss. And I learned from it. I go, okay, I got in here. I should have got in here. Now for future trades with the stocks similar to this, maybe we'll wait for a little more confirmation or something along those lines. So you need to learn from your mistakes. You need to journal so you can figure out what's working, what's not working. And honestly, one of the more important things that I think as well is the second you think you know everything, that's the second the market's going to take something from you. So you need to literally just be a student at all times. I've been a swing trader full time for 7 years, and I consider myself a student to the market. So, make sure you guys check out our school. But anyways, let's turn to the computer here and see our more recent swing trade here. All right. So obviously you guys know this past week here, we did take 3 positions. One of the stocks here was MA, which is also known as MasterCard. Now, looking at this may seem overwhelming or it may seem confusing, but one of the things that I love is make it simple, stupid. So what can you do to elevate your trading? You can make a checklist. So a checklist is an easy thing. It's a set of criteria that you follow to ensure that the stock you're getting in on meets your strategy. So for me, what I do is I get my checklist out right here, right? And I start writing it out. First thing, I memorized it now because I swing trade, full time. But, the first thing is an upward trend. So obviously the stock has gone from lows here at about 435 all the way up to 535, so to speak. And then we had this little sell-off here from 535 to about $500. Now, I never get scared of sell-off. Sell-off always brings opportunity, right? If you look back just over the past 90 years through just the general S&P, you'll notice that through every dip down, the market's always recovered. So you need to have that same approach of, okay, I need to find a stock on an upward trend and master how to get in on these reversals. So for me, I love moving average lines, right? I love the yellow, blue, and red. So we have the 50, the 90, and the 200-day moving average line. The main difference between these are going to be support levels. So the 200 is going to be a harder support than the 90. The 90 is going to be harder than the 50, right? So you guys can see it sold off and hit that blue line, right? This blue line represents the 90-day moving average line, and it's a heavy support for the stock. So what do we have? Let's break down that checklist. Stock on an upward trend, sold off down to a support line, which is the 90-day moving average line. So we don't just make a trade based off that. We also want to know, right, the RSI. The RSI here was trading near and around a 33, which the last time it was trading for a 33 was back in here and here. And what happened? Good moves of buying pressure. So that's exactly what we wanted, right? Stock on an upward trend, sold off down to that support level, undervalued on the RSI, but where do you get in on it? You look at a lower time frame. For me, I use the hourly. You guys can see this general downward trend. Great breakout, and that's exactly where we got in. We actually got in pretty low because we saw just the general market sell off, so we took advantage of that, and the stock did recover very, very well. But another really good entry point would have been above the, above the trend line, and that's exactly what we did for RYAN. We got in on that breakout here, and the stock has been rallying its way up, and we're keeping our stop loss just below that yellow 50-day moving average line. So if we look at the daily, you'll notice it's pretty much the same thing except the 200-day moving average line, right? It hit that red line, upward trend, down to some sort of, support, which is the 200, undervalued RSI, great breakout on the hourly time frame, keeping our stops just below that, and the stock has paid off very well. And all these here are very similar. This one here is just a textbook support, resistance zone, in and out, great move, textbook trades. So for me, you hear those things of people saying, oh, you can quit your job in a year. Yeah, you can do it. It's very achievable, but don't forget, you are the result of your actions. If you are somebody that, you just don't put in the time, you don't paper trade, you don't learn, you're not going to be able to quit your job in a year. I hate to say it, but it's just the truth, right? So I would highly recommend just diving in and going head first, right? Head first, paper trading, learning, consuming knowledge. Now, the broker I use, everybody always asks, is Moomoo. They're fantastic. They offer great charting, paper trading, scanning, and honestly, I'll put a link to them down below. You guys can get up to 20 free stock just by signing up. So click that link, sign up, and I'll see you guys. In there. But this is a simple strategy that you guys can do to quit your job in a year span. So hope you guys enjoyed it. Like, subscribe, and we'll see you guys in the next one. Take care.